You open your trading platform. Charts are moving, candles forming, your heart beating slightly faster, and deep down, you're thinking one thing: I need to be right. But here's your first mistake. Lesson 1: you don't need to be right to make money. A trader enters a perfect setup. Everything looks right, but the market goes against him. He panics, not because of the loss, but because he was wrong. And that need to be right destroys his discipline. Lesson 2: anything can happen in the market. One day, the market respects your setup perfectly. The next day, it breaks every rule you believed in. News drops, volatility spikes, and suddenly your perfect trade means nothing because the market doesn't follow your expectations. Lesson 3: every trade is unique. You see a setup that looks exactly like your last winning trade. Same pattern, same entry, same structure. So you enter confidently. But this time, it fails. Why? Because no two trades are ever the same. Lesson 4: the market doesn't know you exist. You take a loss and feel like the market is against you, like it's targeting your stop loss. But the truth is, the market doesn't know your name. It doesn't care about your account. It simply moves. Lesson 5: losses are part of the game. A trader takes one loss and immediately tries to avoid the next one. He becomes cautious, then emotional, then impulsive. But losses were never the problem. They were always part of the process. Lesson 6: fear comes from uncertainty. Before entering a trade, your mind starts asking questions. What if it fails? What if I lose again? That fear doesn't come from the market. It comes from not accepting that anything can happen. Lesson 8: trying to avoid losses creates bigger losses. You move your stop loss just a little. You give the trade more room. You tell yourself it will come back, but it doesn't. And what was supposed to be a small loss becomes a painful one. Lesson 9: you are not your last trade. You lose one trade, and suddenly your confidence drops. You hesitate. You doubt yourself. But one trade does not define you, unless you let it. Lesson 10: confidence comes from discipline, not winning. A trader wins 3 trades in a row. He feels unstoppable. Then one loss comes and everything collapses because his confidence was built on outcomes, not discipline. Lesson 11: you must accept risk before entering a trade. You enter a trade without fully accepting the risk, and the moment it goes against you, you panic. You close early. Or worse, you hold and hope. But if you had accepted the risk from the start, you would have stayed calm. Lesson 11: if you don't accept risk, you will hesitate. A trader sees a perfect setup forming. Everything matches his plan, but in his mind, there's doubt. What if this one loses too? He waits, he delays, and by the time he decides, the move is gone. Not because the setup failed, but because he never accepted the risk in the first place. Lesson 12: if you hesitate, you miss opportunities. The market doesn't wait for you to feel ready. It moves, with or without you. A clean breakout happens, the kind you've been waiting for all day, but you hesitate, you overthink, you wait for confirmation, and then you watch the price move exactly as you expected, without you in it. That pain is not from losing money, it's from knowing you were right, but didn't act. Lesson 13: if you chase, you lose control. After missing that move, your emotions begin to rise: frustration, regret, the need to be in the market. So you enter late at the worst possible price. No plan, no proper risk, just emotion. And within moments, the market pulls back. And now you're trapped because you didn't follow your plan. You followed the feeling of missing out. Lesson 14: emotional trading destroys consistency. One day, you're disciplined, following your rules perfectly. The next day, you're trading based on feelings, impulse entries, early exits, random decisions, and suddenly, there is no consistency, because consistency is impossible when your emotions are in control. Lesson 15. Consistency is built on mindset, not strategy. Two traders use the same strategy. One follows it exactly, the other changes it after every loss. One stays calm, the other reacts emotionally. Over time, one becomes consistent, the other stays stuck. Not because of the strategy, but because of the mindset behind it. Lesson 16. The market is neutral, your mind is not. The chart is just movement, up, down, sideways, but your mind gives it meaning. This is good, this is bad, this is dangerous, and those meanings create your emotions. The market didn't change, your perception did. Lesson 17. You must think in probabilities, not certainty. A trader enters a trade expecting it to win, not as a possibility, but as a certainty. And when it doesn't, he becomes emotional, frustrated, confused. But a professional trader thinks differently. He knows this trade is just one outcome among many. Win or lose, it doesn't matter, because over time, the probabilities will play out. Lesson 18. There is no guarantee in any trade. You can have the best setup, perfect entry, clear structure, and still lose. Not because you did something wrong, but because nothing is guaranteed. The moment you expect certainty, you create emotional attachment, and attachment leads to bad decisions. Lesson 19. A good trade can still be a losing trade. A trader follows his plan perfectly, waits for confirmation, manages risk, executes flawlessly, and still loses. He feels confused, maybe even frustrated. But the truth is simple. It was still a good trade, because success in trading is not defined by outcome, but by execution. A bad trade can still be a winning trade. Another trader enters randomly, no confirmation, no plan, pure impulse, and somehow the market goes in his favor. He wins. But this is dangerous because now his mind believes this works, and he repeats it again and again until one day the market takes everything back. Lesson 21. Discipline is doing what you said you would do. A trader writes his plan before the market opens. Clear rules, clear entries, clear exits. But when the moment comes, the market moves fast, emotions rise, and he changes everything. Not because the plan was wrong, but because he didn't have the discipline to follow it. Discipline is not writing rules, it's obeying them under pressure. Lesson 22. Your edge is just a probability advantage. A trader believes his strategy is perfect, that it should win most of the time. But then losses come, and he starts doubting everything. Because he misunderstood one thing. His strategy is not certainty. It's just a small advantage over time. Nothing more, nothing less. Lesson 23. Overconfidence leads to careless mistakes. After a series of wins, a trader feels unstoppable. He increases his lot size. He enters trades faster. He ignores small details because now he trusts himself too much. And then, one mistake, one careless trade wipes out everything he gained. Lesson 24. Fear makes you exit too early. A trade is moving in your favor, slowly, calmly, according to plan. But your mind starts whispering, take profit now, before it reverses. So you close early, a small win, you feel safe. But then the trade continues without you, and you realize fear just stole your full potential. Lesson 25. Greed makes you stay too long. Another trade. This time it moves fast. You're in profit. Everything says close, but your mind says just a little more, just one more candle, one more push, and then the market reverses, your profit disappears, and you're left with regret. Lesson 26. Revenge trading is emotional, not logical. You take a loss, and instantly you feel the urge to get it back. Not later, not tomorrow, now. So you enter again. No setup, no plan, just emotion. And that trade is not about the market anymore. It's about your ego. Lesson 27. You cannot control the market, only yourself. A trader tries to predict every move, every reversal, every breakout, but the market keeps surprising him because control was never there. The only thing he could control was his entry, his risk, his reaction, but he focused on the wrong thing. Lesson 28. Your beliefs shape your trading decisions. If you believe the market is against you, you will trade with fear. If you believe losses are bad, you will avoid them emotionally. If you believe you must win, you will force trades. Your results are not just from strategy, they come from what you believe about trading. Lesson 29. You must train your mind like a skill. A trader spends hours learning charts, patterns, indicators, but ignores his mindset, his emotions, his reactions. And every time he trades, his untrained mind takes over. Because trading is not just technical, it's mental, and the mind must be trained. Lesson 30. Consistency requires emotional neutrality. One trade wins, another loses, another breaks even. But the consistent trader reacts the same way. Calm, neutral, focused. No excitement, no frustration. Because consistency is not about results, it's about staying the same, no matter what the market does. Lesson 31. The best traders think differently from the crowd. The crowd sees a strong move and rushes in, excited, confident, late. But a disciplined trader watches quietly. He knows the crowd is driven by emotion, and emotion usually shows up at the worst possible time. So while everyone is reacting, he is waiting. Lesson 32. The crowd is driven by fear and greed. When the market is falling, the crowd is afraid. They sell at the bottom. When the market is rising, the crowd is greedy. They buy at the top. A trader watches this happen again and again and realizes something powerful. The crowd doesn't control the market, but their emotions reveal opportunity. Lesson 33. You must detach from the outcome of each trade. A trader enters a trade and instantly becomes attached, watching every candle, every tick, every movement, hoping it wins, fearing it loses. But this attachment creates pressure, and pressure leads to mistakes. The professional enters the trade and lets it go, because the outcome is not in his control. Lesson 34. Focus on process, not results. A trader judges himself after every trade. Win equals good, loss equals bad. So his emotions go up and down with every result. But another trader focuses only on one thing. Did I follow my plan? Because results are random, but process is controllable. Lesson 35. Results come from consistent execution. One perfect trade means nothing. Two good trades mean nothing. But repeating the same disciplined behavior over and over again, that's what builds results. Not luck, not emotion, but consistent execution. Lesson 36. The moment you feel this must win, you are in danger. You enter a trade and something feels different. This one is perfect. This one can't fail. This one must win. And that thought is dangerous. because now you are emotionally attached. And when the trade goes against you, you won't react logically, you'll react emotionally. Lesson 37. Expectations create emotional reactions. You expect the trade to go up. It goes down. You feel frustration. You expect a quick win. The market moves slowly. You feel impatience. Every expectation creates a reaction, and every reaction pulls you away from discipline. Lesson 38. Remove expectations, gain clarity. A trader enters a trade with no expectation, no prediction, no emotional attachment, just execution. And something changes. He sees the market clearly. No fear, no pressure, no need to be right, just observation. Lesson 39. Clarity leads to better decisions. When your mind is clear, you don't rush, you don't chase, you don't panic. You see what is actually happening, not what you hope will happen. And from that clarity, better decisions are made. Lesson 40. Better decisions create consistency. One good decision leads to another, then another, then another. And over time, those decisions begin to stack. Not perfectly, but consistently. And that consistency is what separates struggling traders from those who finally understand the game. Lesson 41. The market rewards patience. A trader sits in front of the charts. Hours pass. Nothing perfect appears. He feels the urge to enter anyway, to do something. But the disciplined trader waits, because he knows the best trades don't come often, and patience is where the real money is made. Lesson 42. Waiting is a skill most traders lack. Most traders are not losing because of bad entries. They are losing because they cannot wait. They jump in too early. They force trades. They act out of boredom. But waiting, doing nothing, is one of the hardest skills in trading, and one of the most important. Lesson 43. You don't need many trades to succeed. A trader takes 10 trades a day. Another takes 2. At the end of the week, the second trader is more consistent. Why? Because success in trading is not about activity, it's about precision. Lesson 44. You need quality trades. One clean setup, clear structure, defined risk. That's all you need. But the emotional trader looks for more entries, more chances, more action. And in that search, he loses focus. Lesson 45. Your job is to execute your plan flawlessly. You are not here to predict the market. You are not here to control outcomes. Your job is simple. See the setup, follow the rules, execute. Nothing more, nothing less. Lesson 46. Trading is a mental game first. Charts are easy to learn. Strategies can be copied, but controlling your mind, under pressure, with real money at risk, that is the real challenge. And that is why most traders fail. Lesson 47. The market tests your discipline daily. Every day, the market gives you a choice. Follow your plan or follow your emotions. It tempts you, it pressures you, it challenges your patience. And every day, you must decide who is in control. Lesson 48. Mastering yourself is mastering trading. You don't need to master the market. You need to master your reactions, your impulses, your emotions. Because once you control yourself, the market becomes easier to navigate. Lesson 49. Freedom in trading comes from control. Most traders think freedom means making money, but real freedom comes from control. Control over your decisions, control over your emotions, control over your actions. Because without control, profits don't last. Lesson 50. When you control your mind, you control your results. At the end of everything, after all the strategies, all the charts, all the lessons, it comes down to one thing: your mind. The trader who reacts emotionally will always struggle, but the trader who stays calm, who follows the plan, who accepts risk, will slowly, consistently gain control. So next time you sit in front of your charts and your hand moves toward the mouse, pause, take a breath, and ask yourself, am I trading my plan or my emotions? Because that one moment, that one decision can change everything. Not just your next trade, but your entire journey as a trader. And remember, the market is not your enemy. Your mind is. Control it, and you change the game. If this opened your eyes, like the video, subscribe to the channel, and tell me in the comments which lesson hit you the hardest, because your answer might be the key to your breakthrough.